Hey, what's up, Charge? I do not hold Bitcoin, but I can chart it. I can chart it. Bitcoin. $50K now. You hold a Bitcoin, Charge? Yeah, crypto right now is having a ridiculous amount of strength. Just crazy. Didn't expect it to bounce that hard. Definitely thought there was gonna be a bounce, but not a bounce this hard. It's pretty insane. There's just so much excitement in the market. As soon as something moves, people just fucking buy the shit out of it. It's insane. It's insane. The people can't hold it down. We can see if it breaks out here or not. It's kind of what the chart's looking like. Definitely coming into big resistance area right now. Obviously, we have like a quadruple top up at 60. But yeah, I'd say we're coming to a pretty important part right now. You know, we bounced out, we broke out there, we bounced off this trend line, bounced off the 20. So we'll see if we can keep bouncing up into this 53. 50 to 53 has a bit of resistance. So we'll have to kind of see what it does there. That's going to be important to see. But yeah, I don't know if you're still here, Charge, but this is what Bitcoin's looking like. Biddy. See how Cardona's looking. Cardona's been crazy move off that $1 low. What is that up? 200%, which is insane. We had a break out of this descending triangle, which I talked about in my YouTube videos. I don't think we've had this high of a price before, no. So, who knows from here? We haven't bounced off the 20-day yet, which is weird. Yeah, this thing is rocket shipped. But part of the reason it's rocket shipped so much more than others is retail traders love this thing, and so retail traders are just piling in Cardona. It's definitely a retail trader favorite at this point. I would say it's the favorite retail trader coin. And so as soon as this thing blasts off, it blasts off pretty significantly. And obviously there's always technicals to something, but Cardona is one that often breaks technicals just because it gets so much hype. Like, we're already at the highest RSI on the daily off that $1 bounce. And the last time we were that high was back here at $1, so we're back at the highest RSI we've ever seen, which is crazy. And who knows, this thing could, I mean, it's run so hot. Probably needs to cool off a little bit before running up. No, I don't do crypto. I was gonna jump in if some prices came a little lower when they broke down, but they ended up not breaking down. So I definitely think there's something to it. I just have a hard time with the intrinsic value at this point. That's the hardest issue. That's the main issue I've been having with it. It's just like the intrinsic value. What's the value? How do you value it? It's kind of hard to do those things. There's not really a clear way to do it, but I mean, as long as people are buying it, then that it has value. So, but in my book, it's just hard to value these things, you know. I don't know what the market cap on this thing is right now. Ethereum now the third largest coin. That's insane. Which it should be up there, honestly. But like, what is this? 89 billion? It's insane. You know, how many companies are worth over 89 billion? Was a possible high for today for Bitcoin short squeeze? What do you mean short squeeze, bro? Got short squeeze from 30K to 50K. That was the short squeeze, dog. We'll look at it again. I have it charted on here because I was just charting it a second ago. The whole reason this thing pushed so hot initially is because it got a lot of shorts piled into it. You know, we had this descending triangle kind of started. I made a video on it a while ago on my YouTube channel, but back when it was here, and I said watch for a breakdown or a breakout on this descending triangle. And I was like, when it chooses what way, right? 50K, it's going to blow. I don't know if blow because there's so much resistance up here. I think it's it's gonna have a challenge for a couple reasons. So like technically speaking, you know, it's in this kind of overbought territory, which means it still can squeeze higher. But like you just gotta look back at here. So the price is still below this range, which is like a ton of a consolidation. So consolidation means, oh, didn't have my screen. Thank you, Nate Dog. But right here is where all the consolidation is, and so there's a ton of bag holders here. So, you know, I think if it breaks 50, it looks like 53 is definitely a range to look at, because we can kind of see all these candles around this 53 range, and there's going to be a bit of resistance there. So, I mean, if enough new buyers have come in, you know, it could blow past that back to 60, but there's just so much consolidation here. That's when something has that much accumulation, it usually doesn't break down and break through pretty quickly. Like, for an example, we hung around this 40 to 30K for, what is that, 2 months, 3 months, and look where we had accumulation before. The only reason it's stuck here is because we had this here. And so unless insane volume comes in, like, we're just not seeing that much volume right now, so it's pretty unlikely that this thing just blasts through there. It's more realistic to like come up to 43, kind of just follow this trend line, and then do something like this for like a couple weeks, and then if it gets enough buying pressure, we could probably see it break out. But I think that the M's in with those who bought at 56 level, they probably have a win-win deal to get there, then dump and buy lower. Yeah, I don't know, man. You just never know who bought at 53. I doubt institutions bought at 53. If they did buy at 53, they bought a shitload at 30K. You know, if they bought, you know, say, just using random examples, if they bought $100 worth at 50K, they for sure bought 20,000 worth at 30K. And that's why you saw such a springboard, because you saw all this somewhat accumulation. You know, definitely a lot of institutions bought in here. And then once it started breaking out, you know, more money, retail investors started pumping their money into it as well, waiting for the breakout. So yeah, this range is going to be interesting. I don't know what will happen. The uptrend is, even though it's pretty gnarly uptrend, like, it's still healthy. Like, you're having good pullbacks is what you need in any uptrend, you know. Maybe it comes up here and comes back like this to create a little less, you know, steep incline, but you just don't know. But all I know is this zone is a lot of accumulation, which means it's just not gonna blow through it. So like for me, 53, you know, if it breaks 50, 53 is gonna be a bit of resistance. And then up in this, like 56, so 53, 56 seem like some of the key areas of a lot of, oh, thanks for the follow. I don't have my headphones in, so I didn't hear that, but thanks for the follow as well. So we'll see. We'll just have to see, but it definitely seems like there's a lot of strength in crypto right now. So you don't believe we'll see 30K? And man, it's honestly, with crypto, who freaking knows? Obviously with all the scare around like regulation, obviously seems like it's not having that big of an impact. You know, if regulations was really a big deal, then this thing would have broke down. And so either you know, we're delusional and people are delusional about the impact it's going to have, or people just don't care. And if people don't care about regulation, then, you know, I coming back down to 30K is probably more unrealistic. But if we have some kind of black swan event in the markets, I think that's the only thing that's probably has a chance of bringing it down that low again. If we see like a crazy stock market crash, because honestly, if the stock market crashes, kind of like when we saw at COVID, Bitcoin will also crash. People don't like to say those things are correlated, but they do have some kind of correlation. So, yeah, I think only a black swan event, something that's gonna change crypto forever, would really cause this to crash down to 30K or lower again. Is probably what it would take. I don't know how people are valuing crypto. It's really hard asset to understand the valuation, but the valuation only matters if people are buying, and people are buying, so I guess it's worth however much was on the other slide. What was on that slide? People are buying crypto, so that means Bitcoin is worth 139 billion because people are buying it, and Cardano is worth 98 billion because people are buying it. It's I don't know how to value it, and that's always been my hard like. So according to public companies, Cardano is now the 7th largest asset in the world, which is pretty crazy if you compare it to stocks. So that's pretty insane, and crypto's right up there too. So it's pretty insane. But yeah, 30K does not seem like it's realistic to get back down to that price, unless a black swan. I think eventually the market will crash like 90% or something, or 70% in the next few years. The market's just way too hot. It doesn't make any sense. And so typically when things don't make sense and how they're moving and there's not much breath happening in the markets, that typically means a really gnarly crash is coming sometime in the future. That happens in every time in history. When you see these crazy run-ups, it often leads to, a wildly humongous crash. And so I think we'll see the same thing in the markets at some point, because I'm more of a technical guy. What does not make sense about the stock market? I mean, the market's just not pulling back. The market needs to have breath, and the market needs to have corrections, because that's a healthy market. And when those things don't happen, like let's do an example, like Google, for example. Let me see, this is a good example. Okay, if we look at Google, their RSI is at 82, and it just keeps climbing. I mean, who knows? I don't really know the correlation between them. But SPY is really high, and Bitcoin moved with it. Yeah. And it's just there's no breath in the up and down movements of the market. Like, long-term wise, you need there to be, obviously the market in my mind, if we're thinking about like the 100-year time frame, the markets are going to go up. For me, I think when we think of 5-year, 10-year, or 6-month, 12-month, you need to have ebb and flows. And I personally don't think COVID was a market crash. I think it was a market scare, not a market scare, a world scare, and that COVID was going to basically flip the world upside down, which it did for a while, but obviously the Fed stepped in and things like that. But I don't even, like, when I look at this COVID crash on the chart, I almost just ignore it, because it doesn't mean anything. Nothing happened because of COVID. Like, yeah, a couple industries were hurt, but overall nothing was really hurt by COVID when it comes to revenue. Like, we're a year later, and revenues for most companies, I think it said 80% of the companies in the S&P 500 beat earnings. So COVID didn't really do anything to the economy. at least in like the public companies. You're getting really theoretical. I think it's just market health for me. Like when I look at markets, like I don't know why I can't go back to 2000 on this graph for some reason. The free version, they don't give you everything here. Let me see if I can get the XPY. Open this in trade view because I don't think it has to hurt. It just needs to have health. That's how I think about it. A market has to have health, and it doesn't have health, it gets me worried. When I don't see health in a market, something has to happen. And there's just a lot of we can go in this direction if we want. There's a natural law that markets become efficient over time, and over its existence it becomes more and more efficient. I don't know if I guess my counterpoint would be is if the Fed didn't spend how much money they're spending, would that necessarily become true? And if rates weren't at 0%, would that still be true? So is it really the markets becoming more efficient, or is it government support that's making the markets more efficient? Artificially, because that's artificially helping the market. That's not natural. That's not the natural hand, a free market. That's not a free market causing them. The free market is not going up because of the health. It's going up because assets are being purchased by an invisible hand coming in and supporting it. And so that's just my personal opinion on things. And if the market can sell off 30% in 3 weeks or 4 weeks, then is that efficient? I don't know. In my perspective, that's not efficient in my perspective. But only time will tell. That's just my perspective. I could be wrong, but that's what I personally think is going to happen. And I think we're starting to see a lot of things going on that are showing cracks in the foundation, in my opinion. But we can have different opinions, and that's okay. See if I can get this. Let's see if this is the right chart. Okay, this is a chart from back in. That's not the one I want. This is the one. So for me, I'm looking, if I think of macro health, margin debt, I think is a big thing. That's one of the more macro, because now we're talking macro related things. Margin debt is a big thing, that I pay attention to. I pay attention to Fed spending, because obviously that's become, in my opinion, a big part of the market's success. When you really, when you make a chart of Fed spending and the S&P 500, there's a very, very, very strict, I would say causation. I wouldn't even say correlation. I would say causation between those two things. And the same thing is with margin debt. There's a really strong causation between these two things. So I look at Fed spending, printing money essentially. I look at margin debt. I look at interest rates. These are all macro things that I technically look at. That's because the Fed spending ultimately ends up on largest business balance sheets. That's why there is a correlation. Yeah. Well, yes. You have to look at what they're buying, but that's just my opinion. Those are things that I look at macro wise, and when I'm doing my analysis on things at a macro level and seeing things that are going on, You know, we can break down CPI, PPI, all these different numbers happening in the economy, inflation. Like, in my opinion, there's a lot of artificial things that are propping up the markets and keeping them stronger than, in my opinion, they should be. Because I'm not seeing, from the analysis that I do on market cycles and how things function, there's just a lot of things that aren't making sense. And when I start to, in my opinion, when things don't make sense, then I start having red flags about the markets. And it doesn't mean the markets can't keep going up for 2 more years. And it doesn't mean that I'm going to stop investing, you know. That doesn't mean I'm going to buy things because there's opportunity in the markets and I'm going to take those opportunities. But there's just things I'm looking at to see how healthy things are looking. And I just don't see a lot of health. I see things going up, but the stocks going up to me is different than health of the markets. So, I don't know. That's a big tangent. But if anybody has any specific questions on stocks, we can get off me talking about macro, because that's not really what these Sundays are for. They can be, but they're more to just go over stocks for the week. To my chart. Where are we at? Oh shoot, my trade view. Yeah, my trade view canceled out. Let me open it back up real quick. Shoot. My chart all over. That stinks. Insane. Popping like it's hot. Fang is insane. Fang are probably the most insane companies on the market. Besides, I guess I don't know about Netflix anymore, but the rest of them. Oh, here we go. Now I'm getting all these years. Here's my long-term analysis of the S&PY. The SPY. see how many years. 2006 to 2020, we were over that line. Huge short. Huge short what? I gotta figure out what to say, how to say your name easily, because I don't know how to say it. Let's go Esber. That's easy for me to say. Esber. Huge short on what? What are you shorting? Bitcoin, like Buick the car with an R in the middle. Oh. I'm going to call you Esper instead. It's easier for me. You're shorting Bitcoin. Why are you shorting Bitcoin? What's your reasoning? Gotta rechart everything because I freaking deleted out of it on accident. How is the marking? I mean, the futures are up. They're getting back to highs if I remember correctly. Let me bring it up again. The dollar pulled back. So it's so ironic. It makes me laugh so much. I mean, the markets don't always. It's more on rates that the indexes move against, but the dollar is often correlated in there as well. So the market's down, or the dollar's down, so the markets are moving up a couple dollars so far. I mean, personally, in my opinion, I think I'm not. Just saw the dump. Was wondering what would happen if I were to buy at 50K. Gotcha. I don't know, honestly. Technically, like I said before, 53 is going to be a lot of resistance. 56, I can see some more consolidation in that zone. Oh, thanks twice for the follow. If any of you guys out there got an Amazon Prime account, you can sub to the channel for free and support the stream. It would be much appreciated. But thank you for the follows as well. Those are equally appreciated. I don't know if you were on here a second ago, Jake. I was talking with Zeter about it. Zeter, you haven't been here in a couple weeks, if I remember. Zeter and I have opposite perspectives about the market. But I mean, I think the markets, they look like they continue to have a lot of strength and are continuing to move up. The SPY is not always the best. The SPY and the QQQs are not always the best indicator of the overall market health. Because a lot of markets are down quite a bit from their 52-week highs. But if we're talking about SPY and NASDAQ, I mean, the majority of what's in there are continuing to see a lot of strength. So, I mean, the markets continue to keep up with a lot of strength. I personally think the markets are broken, but that's just my personal opinion. And so that's why I'm investing. I'm playing more short term, currently. But I'm still playing the market because why would I just sit on the sidelines? That doesn't make any sense. So I'm playing the markets. I'm not a purple by all means and always look for a solid bear case. Yeah. I mean, I think we're in the same boat on that point. Zeter, if the market's going up, find opportunities to play that market going up. Just because I have a bias of I think the market's broken and really unhealthy right now doesn't mean that I shouldn't invest in the market. It's just I think that the market's setting up for a really bad thing, for investors. I don't know what's going to happen. I think sometime in the next couple of years, that's just my bias. But things are just getting out of control. in terms of Fed support, artificially keeping interest rates really low by the Fed pouring money into the bond markets, things like that. Yeah, I just think the markets are broken, I can't remember what it was. We haven't had more than a 5%, or what was it? Oh man, what was the stat? I can't remember the stat. We haven't had more than a 10% pullback in like a year, which is crazy. In such a volatile market, when you have volatility to the upside, you typically need to counter that to have less often, but also volatility to the downside to keep that health of the market. I hear horror stories of Fort Wayne back in the day, yeah. I mean, I personally don't believe that, some people are like, we'll never have a crash like 2007 again because of QE. I think QE has extended cycles, but eventually, like, spending so much money can have a really negative impact from a economic perspective. It just takes a couple small things like credits, the IBM, or not IBM, the international, what's it called? The IMF downgrading your credit score as a country because you're spending and creating so much money. There's little small things, wars, like if a war happens between two countries, things like that. These little tiny things can really, as we've seen while COVID, the market crashing 30%. The markets are really fragile, even though they keep going up. And just because the Fed's spending a lot of money doesn't mean the market can't crash, and for a significant amount of time. But the markets can keep going up for a long time. But I think it's setting up a really bad scenario for a lot of people, which is unfortunate. But that's my bias. But yeah, I mean, we bounced off. When we look at the SPYs, SPY is not always the overall health of the market because there's different sectors. But because this is so weighted towards FANG. But we bounced. I made a video last week on it, but we had 1 day under the 20 EMA. So I always use a 20 EMA as my main guide. My first guide towards seeing what might be happening in the markets, and I use that on SPY and QQQ most of the time. And so I was really paying attention to the 20 EMA to figure out what might happen, in the next coming weeks. And so we saw 1 day below, but then the next day it bought right back up, or 2 days under. But we had that big green day on the second day, which was basically didn't really even almost count. And then we had to follow through the next day. So now we're above the 20 EMA again. I think it was like a 2.5% drop in the SPY or something like that, or 2%. And so now we're above the 20 EMA. I'm buying that bad. Nice, man. So we're back above the 20 day. And then my line in the sand was if I thought we were going to break all-time highs again in the market, 444 was my line in the sand. And that was just mostly due to where the markets were consolidating around before. So you saw a lot of consolidation between 443 and 444. Where's that at? Here it is. And the futures, I think, have broke up above 444, I believe. So I think there's a high probability that we break all-time highs in the coming weeks. We have, what's it called? The Fed's meeting at, what's the name, guys? Anybody know? What's the Fed meeting this week? It's like a week-long meeting where they're debating what they're going to do with tapering and interest rates and such. Jackson Hole. Jackson Hole is this, I think, the end of this week and next week. Let me look this up. I think it's called Jackson Hole. So Jackson Hole is next week. Let's see if this is a calendar. That's not a helpful calendar. Can I just get an article somewhere? Let's see. Of course, can't read that one. Jackson Hole will convene on Friday. So this Friday, Jackson Hole is coming, and there's obviously last week, I think the market really went down because of all the talk around them saying they were going to taper, and I would say some people, mostly on the right side, more conservative Fed members, were talking about tapering. They were saying that we need to taper, and then obviously on the left side they were kind of similar to Powell, like we need to keep spending for a little bit longer. And so they meet this week to talk about their purchasing and when they're going to taper, if they're going to taper. And the Fed doesn't seem like they're wanting to give us any answers, so I would assume that we're not going to get any answers still. That's at least what it's seeming like. So they're $120 billion per month. I think they're still spending that. Let's see if we have more details here. Thanks for putting that, Nate, in the Discord as well. To the moon comedy. Jackson Hole target for when we might actually hear firm language around tapering. Who really knows? I'm not really expecting much from Jackson Hole. I would agree. I think Powell would have said something already if he wanted to. Around November meeting, that's a long ways away. So if the taper scare starts getting pushed back down, then the markets aren't going to really are probably just going to ignore it till later this year. So we'll have to see. I think what's important is next month's CPI and PPI numbers. I think that's going to be really important. Because CPI numbers started to slow down, which is potentially pointing at prices are going to start declining. Then we saw a lot of the metals and things pull back last week quite a bit. Even though I still think those are going to go up more, but those have pulled back quite a bit. Some people were pointing at deflation as the next step. Who knows when that'll happen, but people are pointing towards that. So I think CPI numbers, which is Consumer Price Index, and PPI numbers are going to be important because last month we saw PPI numbers continue to accelerate at the highest rate we've ever seen them, I think in the last 20 years or something. But then we saw CPI numbers slow down. So in my mind, if PPI's numbers are accelerating still, eventually that's going to get passed on to the consumer. And so CPI should continue to increase substantially. And so if we see that the rate of change pop up in the data at the beginning of next month, then that, I think the taper talk will continue to be something that we see in the media. But I think we'll just have to wait for those numbers to come out. Because if they do come out lower and slowing down, then the whole taper if they come down, then maybe the taper conversation will come back up. And if they do show more acceleration, I don't know. I think it's a lose-lose, but we'll just have to see. Yeah, we can look at charge point. Let's look at charge point stock. Oh, pulled back. I'm fairly certain inflation fears are overblown. There's enough fuel being poured into the economy to excel the fire, like wage growth. 1% is still 1%. Yeah, I mean, I'm in the camp that I agree that hyperinflation is not going to happen. I do think that we will see CPI and PPI numbers stay elevated for a while, and that's just because of all the things we're hearing about shipping continue to be delayed, and that's, I would say, the biggest, and chip shortage, and those things I think are going to keep prices up. But I don't think we'll see hyperinflation. I think the main issue that I'm concerned about is if the Fed keeps pouring the same amount of money into the markets, and we still see an inflated number on CPI and PPI, we're starting to see wage growth decrease pretty substantially. So we were seeing wage growth between 6 and 8% early in the year, and now last quarter, or sorry, I'm getting my things mixed up. We saw GDP growth hit 6.8% or 6.8%, 6.8% I think, or 6.5 compared to the 8.6 expected. So we're seeing inflation or CPI and PPI numbers stay elevated, but we're seeing GDP and wage growth start to decline. And so if we continue to see that correlation between things happening, then I think that's going to be an issue for the economy. But nobody knows what's going to happen. But I think if we continue to see GDP growth slow and prices continue to stay increased, and wage growth continue to slow, then that's going to cause stagflation in the economy, which is a worse case than hyperinflation, in my opinion. But we'll see if that happens. Nobody really knows. Okay, so for charge point, let me go to the daily first. So I think it hit a support. Yeah, it hit a support in this zone. So it came back down to this load zone. So I think we'll have to see if this is a load zone again or not. Obviously, we had a triple load zone back here in March and April. And so we'll have to see if that's the case. I think we'll have a pretty good indicator this week. You know, the markets are breaking out in the future. So if we continue to see those break out, those might have some residual impact on these stocks that have sold off a lot recently. The smaller cap tech, which is like SoFi, CHP, all the stocks I cover in my YouTube channel, CHPT, SoFi. What are some other ones? I don't know. I don't remember all the stocks I talk about, but that can definitely have some positive impact on this. So yeah, we're back in this load zone. We'll have to see if it holds. Let's see how this trend line is looking. So yeah, I think this week we're going to see if this trend line holds to the downside on the daily. I would say if we break it, there'll probably be a little short squeeze. Let's see if we have any short numbers on CHPT. So try to see if I can find the short interest on CHPT. Because if it breaks that trend line and there's a high short float, then we could see a little squeeze maybe back to the 20-day. Because we pulled back pretty far away from the 20-day on the daily chart, which definitely means we could get a squeeze back up. Okay, short float's pretty low, so we probably won't get a squeeze, but we could get some buying pressure. Yeah, short float's really tiny right now, so probably nothing happening in terms of a short squeeze. But if we do break this trend line, you know, and this week's going to be the termination because this week's going to come into this downward trend line. You're mostly in the technical. I personally believe proper decision requires 50%. Yeah. But when you say fundamentals, ChargePoint is a terrible fundamental company. Their growth has slowed. I think their revenue to market cap is like 15 times revenue or something, or 20 times revenue. They're not profitable. They're losing hundreds of millions of dollars a quarter, I believe. I mean, the future is promising. That's not fundamental, though. That's a speculation, in my opinion. But that's just my opinion. I'm not your financial advisor, but that's my opinion. So that's why I look at these stocks technically and not fundamentally, because I think the fundamentals are shit on most of these at this point. They're just, the valuations are so high, and that's why they're not at 60, or that's why they're not at $40 anymore, because people are realizing that the valuations were really outrageous. Yeah, this is ChargePoint. Yep. Yeah, definitely with the infrastructure I don't know how much of that is going to actual like charging companies. I know they talked about it. I know a large point is going to the grids, which is not necessarily connected to companies like ChargePoint, but maybe they'll have impact on companies like ChargePoint. So I don't know how much money they're actually putting towards kind of growing the EV network. I think a lot of the infrastructure bill is focused more on big picture energy in terms of changing the grids for cities and things like that and improving them, or states. But yeah, I mean, Nate brings up a great point about government contracts or subsidies. Obviously, we know, we've been talking about ChargePoint for a while, but we know Biden is a big green buff. So definitely has a positive impact on green stocks. And ChargePoint is one of those. Again, long term, I think ChargePoint is a great company. What I've been struggling with a lot of these high growth tech companies is valuations, but valuations don't mean much really in this market. But I think we'll have to see if we break out this week. Obviously, this candle is going to open at 2120 and we'll be right on the verge of this downward trend line. So if we do break out, let's look at the 4 hour. We could definitely see, if we see a lot of bullishness in the indexes, that could definitely, I would say, and the IWM, which is small caps, because I see these having much more correlation to the small caps index, even though they're not in. I don't think they're in that index. So yeah, we're right on the verge of breaking out. So it definitely looks like we have a breakout, and so 21.50, so $1 up from here, $1.50 up from here would be around my first. So 21.50 to 21.80, and then if we break out from there, I'll be looking at a 20 EMA touch, which is at 21.60 or 22.60. Nate, see if you can find any call options on this. Probably a good call option opportunity here, because I'm assuming most people aren't expecting a push higher based on recent price action. Let's see where the 20 moving average is. It's even higher, 23. Let's use the EMA. It's probably more realistic. Yeah, because we haven't touched the 20 EMA since August 13th, which is like, what is that, 2 weeks ago or something? Week and a half ago. So, yeah, we could definitely see on this breakout a little bit strength to the upside between 2180 and 2280. And you could probably find a nice call option on that for a short-term play. So that's what I'd be looking for there. But what's your view on Kathy and ARK? We were going to talk about it this week. That's so funny. But we didn't because we watched my Wipeout episode instead. But we're actually going to talk about that next weekend. We'll bring up that topic. So I don't know if you've ever come to our Saturday night, Zeter. Hey, Baboon. Dow outperform here. Yeah, that's what we were going to talk about. Yep, Baboon. We're looking at ChargePoint right now. But yeah, come next Saturday we start our live stream podcast on Twitch at 8 p.m. West Coast time. So we'll be talking about that. There's some funny points, as Nate mentioned. The Dow has outperformed her, I think, this year, which is pretty ironic because she's high growth, and Dow is like the opposite of high growth. So that's just a really ironic point. But yeah, I think that's enough analysis on ChargePoint at least. Anybody have any other stocks? Let's see if anybody bought on this dip. Institutions. Let's take a peek. Something in the chat. Exhaust. So we had a little bit of some dip buying. We had some dip selling too, which is not always encouraging. Someone selling out 42 million on the dip to 20. That's not so encouraging. But we had a big buy here, which is nice, 490 million. That's a big buy at support. I mean, it's a low risk, right? Right now on ChargePoint, honestly. Like, put a stop loss, whether it's a call option or buying shares. You know, put your stop loss at 2070, buy a bunch, and then put a stop loss and see what happens. Yeah, I agree, Nate. Nate, you're going to have to teach us all better how to analyze stop options. I'm terrible at it. It does look like it wants to peak up this week. You know, $1 to $2 higher. I don't know how much higher above $1 to $2, but $1 to $2 with a really tight stop loss. It seems like you could probably make 20-30% on a call option, if not more, if we do see a $1 to $2 price to the upside. Okay, Exos. What's this company? They a biotech company? Daily. Okay. Let me look at the fundamental side real quick, just so I can get an idea. Cause you know I like. Oh, thanks. Did I say twice? Oh yeah, I already said thank you for subbing or liking. Okay. What do they do? Make like early stage cancer on early detection. Normal Phillips 66. ARC-G's been buying. Anything with DNA, ARC scoops up. ARC loves the DNA companies. They have a fund of nothing but DNA related companies. And what, in my opinion, what ARC is doing is they're basically just buying every single company because they know one is going to explode to the upside. And that's their bet. Okay, institutions been buying on this dip. A little bit of buying on the dip. Ooh, someone bought $3 billion yesterday, or on Friday, or on like Thursday or something. That's a fucking big buy. Oops, excuse my language. Is that a buy? Or they added 8% to their $2 billion position. I'm not sure how to read this, but somebody bought in who owns a lot. So maybe they were averaging down their position. I don't know. I'm assuming most of these people are averaging down their position, honestly. That's crazy. Let's do this by name. Where's that price? I want to see if they've bought multiple times. Oh, only one buy. Crazy. Let me look at... Axis Institutional. Yeah, exactly, Zeter. I agree. It's all about the catalysts. But there's honestly still some. I think every you can do technical analysis on any stock, whether it's stocks, whether it's the dollar, whether it's bonds, whether it's crypto. Technicals everywhere because everybody does it, and that's the only reason it's valid. But with biotechs, you can have something positive or negative, and it can shoot up 30%, or it can break down 30% with no technical aspect about it at all. So, no big buys recently. Okay. Okay, I don't like playing earnings on companies, but that's just my bias. Maybe buying before their earnings. I don't like buying during earnings, especially with biotech companies. I would say they're more risky than almost anything. So yeah, I mean, crazy valuation, but that's as expected because anything in the DNA space is like, 10, 20, 30, 40, 50 times revenue. But they do have some revenue, unlike some companies that don't have any revenue. What is that, like $2 billion a year? That's not bad. That's like 8 times revenue. Other companies are worse. Ooh, they really lowered their cash on hand. That's not good. Maybe they're blowing through a lot of cash or they made an acquisition or something. That's weird. But if they can't get more cash somehow, they're definitely gonna have to dilute shares. Because this is a high cash burn business, and it doesn't seem like it's changing. So that's a red flag long term, but you're not trading it long term. What day are their earnings? What day are their earnings, Baboon? Need to do that. Yep. So they're at support. Oh, they just had their earnings. Gotcha. I mean, this is definitely a, you know, put a stop loss where it's at. You know, put a stop loss at whatever that low was, 89.80, and then play it to the upside. So, I mean, it literally hit support for 1, 2, 3, 4, 5 days in a row, and so now it's trying to. So it hit support there, and now it's trying to break out of support out of these candles wicks, the bottom there. And if it can break out of this little consolidation zone, you could definitely get a couple dollar move to the upside. Where we're at 93, stop loss of 89.80ish, and it could move to 100 to the 20 EMA. So it's like was that an 8% gain? Aiming for 110. Maybe. I don't know. It's in a downtrend. Let's see how the charts are looking. Okay, we did double bottom, but it still isn't a downtrend technically. So if it does start moving up, I would just be looking for a touch of the 20 EMA and see what it does there. Because the 20 EMA is around this trend line as well. So it'll make a decision here if it does move to the upside. And if it breaks above the 20 EMA and the trend line, yeah, you have the 50 EMA at 108. So let's see, I think we have big resistance. Okay, so we have big resistance at the 20 EMA around that 98, kind of what we were saying. Yeah, that's always an option. Yeah, so 98, 105, and then you have some consolidation between 105 and 110. So if it can break the if it can break above the 20-day and this downward trend line, I think it could definitely move to this 105 to 110 range. But it would need to break that 20 EMA. If it doesn't break the 20 EMA, it's going to bounce off it and head lower. So, because it's in a downtrend. Downtrend hitting the 20 EMA and reversing typically means it will go lower. How do you see it overall? I mean, I don't know. It's hard, biotechs, kind of like Zeter was saying earlier. Honestly, biotechs are hard. Their valuations have moved up significantly. One, because of Cathie Wood as a trade. Yeah, like I said, stop loss at 89.80 at this support. Because if it breaks 89, it's probably going to 79. So, I mean, we can look at short float. Because typically when something's oversold, it doesn't mean it's going significantly higher. Unless it typically has a really high short float. If it has a high short float that can cause a really dramatic squeeze, yeah, there's no short float on this guy. So just because it's oversold doesn't mean anything. It just means it can come a little higher, and technically it's not oversold anymore. It's above 30. But it was oversold.
So we'll have to see. But yeah, stop loss at 89. If it breaks below 89, it's probably going to move to 79 ish, 82 to 79. So stop loss there. Watch for the 20-day tag at resistance at $100. And then let's see what the 4-hour is. Yeah. So 85 breaks 85, goes to 100, and then 100 will be around the trend line, which will be later into the week, halfway through the week. So if it holds this support again, because we had a lot of consolidation, so if it breaks out above this consolidation and can break the 20-day on the 4-hour, I'm assuming we just broke above it on the 1-hour. Yep. So yeah, break above there, probably something like this. We'll have to see if it can break the 20-day and the trend line. If it does, you know, it could move into this range, which is the 50-day. Oh, the 50 days lower than that. 50 days at 102. So maybe something like that, but just depends how much strength. 20 days is the main thing to look for. Okay, everybody. Anybody else any other stocks you guys curious about? I know one thing I was texting or messaging Nate on was Avis. So we had a double top on Avis. And so I was messaging Nate about doing a call option, but you could do a covered call or covered no, not a call, a put. I was talking to Nate about doing a put on this. Yeah, no problem, Baboon. It looks like a good play if it breaks above that little consolidation zone. It's a good find. But I was talking about Nate with this as a potential put for this week. We're seeing a lot of weakness in the car industry. Obviously, Avis isn't directly a car company. It's more of a car rental company. But with the chip shortage, people are having a hard time getting more vehicles. Car rental prices are, I think, still pretty are pretty elevated, which has slowed down the revenues. Short put. So we've seen that the Fords and the GMs get beat up a lot, but we're seeing, you know, Avis see a lot of strength and it double topped here. So this is something I'm curious about. You know, that's a pretty strong double top. Some people, you know, might call this a cup and handle. We'll have to see if it confirms that, but this is something I'd be looking for if it continues to break down. So, yeah. I think their revenue is going to slow down. Kids are going back to school, so family vacations are mostly done. We're seeing elevated prices still. We're still having issues with car inventory, and it's not getting any better. So I see those all as negatives for anything related to the car industry. And back to school always, you know, people are doing less vacations when kids go back to school. So those are some soft factors or indicators, but nothing on the chart is telling me that it's a sell yet or to get a short on this, you know, still holding the uptrend, recent uptrend. I'm on a 4-hour. I want to go to the daily. So obviously this has had crazy. This honestly looks really similar like Ford a few months ago, if I'm honest. Ford saw a crazy breakout, saw a top. It didn't hit double top on Ford, but this acceleration to the upside looks very much like Ford did. And now Ford is breaking down, which is interesting. So I think long-term health, I would like it to come back down to this long-term trend line. I think this is way too bullish of an upward momentum for what Carvana or what Avis is, the industry that it's in. And we're at a 11-year high for this company. So I would like it to come back here. But like I said, we're still above the 20, or that's the 50. Where's the 20? I'm assuming we're above it. Yeah, we're still above the 20. RSI still above 50. I just think it's got a little hot. And technically we're seeing divergence on the RSI. So we saw a higher high. Actually, yeah, we should. I mean, we're seeing a lot of the stock market do this lately, which is wild to me that it keeps breaking up because we're seeing crazy divergence. But yeah, so this is something I have my eye on for a short because I think it's got overextended to the upside. So we'll see. It looks like it wants to make a decision this week. If it wants to go up and try to test the higher highs again, or if it wants to break down. And I would say if it breaks this trend line and the 20 EMA, they're kind of in the same spot, then we could potentially see, you know, a little short downward movement here and see where it goes. You know, it would be nice for it to eventually hit this trend line again. So that's something I'm keeping my eye on for a put. But I'm terrible at trading options. That's Nate's thing. So Nate's holding my hand on these ones. Nate Dog. Any other stocks anybody has had questions on? Any other topics? Let me look at the futures. See how they're looking. Okay. Popped, but now it's kind of stalled out. I honestly think the futures are up because the dollar broke down. In my personal opinion. Oh my gosh, the QQQs. I don't know, they didn't hit all-time highs yet. It's close though. The QQQs are 50 cents away from all-time highs. That's insane. Let's see if gold's breaking out because of the dollar. Nope. Gold is flat. Let's see. I'll just fuck around and look some other stocks. Oh, here's one. This is what I'm keeping my eye on. I'm giving y'all some freebies here. But this is one I'm keeping my eye on. They had blistering earnings. They're a pot company. Grow something. They do like a lot of hydroponic. I'm saying that wrong. But they had killer earnings. They've been having killer earnings all year. You know, a year ago they were 55 million. Now they're 125 million. You know, they're breaking their year over year 200% growth. They missed earnings per share. They beat revenue. You know, light on the cash in my opinion, but they're EBITDA positive, which is something I always like to see with growth companies. That, in my opinion, gives them 1.7 billion. Doesn't look that bad to me when I'm seeing an EBITDA positive company. When I see a company like this, NNDM, 1.4 billion, 800K in revenue, and 9 million loss, that is a red flag in terms of valuation. But when I see a company like this, you know, they're creeping up to be about a $500 million a year in revenue, and they're not EBITDA. Are they EBITDA positive? I don't know. Net income positive. Was their EPS positive? Earnings per share positive. I like to see that as well. So fundamentally, this company, you know, maybe a little rich at 100 PE ratio, but it's growing significantly, 200% year over year. And then tech, they moved down significantly in earnings, which was strange to me. I don't hold it yet, but I've been keeping my eye on this for a while. What do we even do here? So they sold off pretty significantly, which is interesting. But this is what I'm keeping my eye on. I was going to wait for it to try to come down to the bottom of this semi-channel, in quotes. But it does look like it's curling a little bit, so we'll have to see if that confirms a breakout or not. On that pullback, it's super far away from its 20 EMA now, which is what I like. I like to see that. Obviously, long term, it's freaking already moved crazy amounts, from $3 to 30. What is that, 10x? So it's, valuation's gone up a lot, but it also has grown its revenue a lot. So, but still in a bearish phase. So not a long-term play quite yet. It hasn't been able to break above 50 RSI for a significant amount of time since March. So this is bearish. Everything's bearish here, but it's oversold significantly. And so I would like a little pop here. That's what I'll be looking for. A little pop, potentially, because it does have some accumulation. Maybe a pop to 33. That's not a bad move. What's $3 there? 9% move? Is that what that math is? 9-10% move? It's not bad. AMD. I mean, I love AMD. I think they're an amazing company. Their growth is insane. I haven't been able to figure out with companies if it is a good thing or a bad thing, because if we flip it, companies like Ford and GM, car companies that saying they need these chips for their vehicles. Obviously, I don't know if they're exactly the chips that AMD make. I'm not sure what kind of chips they use, but overall, there's just a macro chip shortage in every capacity. And so I haven't figured out if chip shortage is good or bad for companies like AMD. I don't know. It seems like it's not, because they're all going up for the most part, or have been. Obviously, they moved up significantly. Crazy breakout on that amazing earnings. I mean, a company growing 100%, that's already, what is that? A $7 to $12 billion company is pretty insane. So a lot of positives there. I think AMD will continue to have a bright future. Let's see what their forward moving PE is. Yeah, 34, about flat. I think I'm really curious next quarter and the following quarter, because I think with companies like Ford, they're pricing in earnings moving forward. But it doesn't seem like this is being priced in. Intel's had trouble with their company, who's a chip company, and that's why they've pulled back. Micron, they pulled back. I don't know necessarily why, but I know Micron's pulled back. Obviously, these guys have pulled back from their crazy high, but they're still, they're still well above that move from the beginning or the end of July. So it doesn't seem like the shortage is having much impact on them yet. I see the chip shortage as a negative, but, you got to read the price and what the price is doing. So, in that regard, it doesn't seem like a big issue to people. Interesting that's still moving up so drastically, because we are seeing some institutions sell a little bit more. Pretty even. So no red flags necessarily. Buy, sell, yeah, just kind of back and forth. Indecision. People taking profit. Some people adding here because they like the valuation. That's probably what happening on that perspective. But as a company, I mean, I think they've been crushing earnings all year. Yeah, like last couple quarters growing 100%. That's insane. 50% is insane. So to be able to grow 100% is absolutely crazy. Towards the end of COVID, during COVID, these companies were growing more than they ever have, but to still see acceleration in that growth is a really big deal. And so I don't know, man. With consumer spending shifting, because I know a big part of AMD's business is consumers, like computers, gaming computers and such. And I think crypto, which is I think becoming a new sector for all these companies. They're saying that the economy is shifting from, during COVID with all the stimulus, from buying goods back to services. So people aren't buying as much things anymore, and that's, I think, a lot of soft reasons, like people aren't getting, stimmy checks anymore. Unemployment is ending in a month. Maybe they'll extend it again. Who knows? They extended eviction moratorium, so there's still a lot of support that's helping people have free cash to spend. But we've seen saving rates come back down to the average. We're seeing consumers spending shift back to services. So I think they're going to have a little softness moving into the second half of the year on the consumer side of their business. But I don't know enough of where their revenue comes from for how much is it people buying things for their PC compared to businesses who need their products for their to make their business succeed. So I'm not sure. Technically speaking, I mean, they've pulled back pretty substantially from that high. Let's go to the daily chart. So technically wise, I think if I remember, Zito, you do technicals, right? But not fundamentals as much. I'm trying to remember if that was our conversation a while ago. I think it was. So it looks like it's, I do both. Gotcha. So those are just some of my thoughts on that perspective of it. I do think we're going to start getting to more realistic growth again. Just all the indicators are pointing at that. I still think companies like AMD are going to grow. I'm not sure. Gotcha. Single play companies. Gotcha. Yeah, I mean, honestly, in this environment where some stocks sell off and some are making new highs, the one thing you do see right now is that the indexes are continuing to make higher highs, and so they're the best things to play right now, in my opinion. Unless you do a ton of research on a company and really have a lot of due diligence, I agree with you there. I think the safest thing to play in the market right now are the indexes, because they're so weighted towards the companies that are performing, like Microsoft, Google, Facebook, things like that, that it makes sense to play those. But yeah, technically 20 EMA right now, so I think we're going to get a decision pretty soon. Things don't typically hang out, they typically, either make a decision here or they'll kind of, go like this. After a big move like that, I mean, I doubt we're going to get another big move like that. So either consolidation or something like this maybe for a little bit. Just to bring some health back to that chart. But we got another trend line here. It's not a perfect line, but pretty close. So yeah, we're hitting a trend line. We're hitting the 20 EMA. Looks like decision time for AMD. Yeah, so I think it's just decision time. Is it going to hold 20 EMA, and will it hold the trend line, or are we coming back to all-time highs, which is 99 to 95, which is where the 50 EMA is. So hold 20 EMA and start crawling up, you know, slowly. That's going to be healthy for the chart. This is not a healthy move. That's why it's pulled back. But if we see the little worm its way back up, that's a positive. But if it doesn't hold that 20 EMA, I'll be looking at this zone potentially, and then to hit this long-term trend line again and see if it can hold it. Time is it? 10:30. Okay, one more stock. Anybody have a stock they want me to cover? Yep, no problem, Zeter. Thanks for all the back and forth, man. I enjoy talking with people about, you know, the macro stuff too, and getting your read on the market and what you think. And I like bouncing thoughts back and forth. That's fun. Still getting sleepy. Index making highs. I don't think higher highs. I don't think all-time highs. Not quite yet, but it's close. See where the Qs are doing. Yeah, Qs are close. They're like 30 cents away. But I'm assuming the dollar's breaking down more. I'm telling you guys, if you really want to know how tech is going to perform, look at the dollar. The tech and dollar are they're inverse of each other so often. But that's because the dollar and some was it TLT are inverse too? I don't remember which one. But yeah, the dollar's breaking back down to 90, 30, or 93. I don't think I can pull the dollar up on here, which sucks, because that would be a fun chart to look at. Let's see if it'll let me. Oh, bastard. See if I can do it. DXY. It's $ DXY. Let me try dollar DXY, see if it comes up. Does not. Bastard. Bitcoin is a new dollar. Lol. Yeah, they have TOS has a chart. Okay, I'm gonna bring it up here. Okay, so this chart is not reading the futures. This isn't helpful at all. Damn. Oh, it is reading the futures. I lied. Okay, so I think if the dollar breaks below 93, we'll see the indexes break all-time highs again. I've been keeping a close eye on the dollar recently because it's made big moves. So the dollar looked like it double bottomed. I mean, right here. So it hit down at 89 in January, came up to 93, and then broke back down to 89 and double bottomed. Stop it. Zoom in here. And it even bounced off the low point in 2018. And so we have a bottom, and then we have a bottom, and we have a bottom. And so, you know, if we think about when tech underperformed, If we go back to last, like October-ish, we saw that big drop in the indexes, specifically led by tech. And then back in March is when we saw that big drop. Or sorry, this is inverse. Wait, now my mind is confusing itself. Okay, I just fucked my own brain up. Let me just talk about this. Okay, so we double bottomed here, and we hadn't broke above this 83.40 since back in last July. So that's when we consolidated around this place. We had one pop above, and then we consolidated for a while. And so last week was the first time we broke back above that 93.30. And so now the futures are coming back and trying to test that breakout zone. So that's really important because with all the talks around tapering and such, if the Fed tapers, that's going to create more upward pressure for the dollar because, you know, the more money you print, the less value the dollar has. The less you spend or the less you print, the more value the dollar has. And so I think the taper talk this week will be interesting to see if they say anything at Jackson Hole. Because when the government spends less, then small cap tech feels more downward pressure. And that's some correlation with the dollar as well, but I think we'll have to see if it bounces off right here. This zone right here. And I think if we see a bounce off here and hold this trend line and continue to move up to the upside, you know, we might get some more weakness in tech a little bit, but there's so many other factors. This is just one of the many factors. But this is something I've been keeping an eye on a lot more recently to see how the dollar's performing. People are trying to anticipate what the Fed's doing. Okay, guys. Hour and 45 minutes tonight. Not too bad. Thanks, everyone, for hopping on. I really appreciate it. I always have fun on Sunday night with you guys because I am... because I love this side of trading, and I love talking about things, just, you know, free flowing. You know, Saturday's a little bit more structured with a more podcasty thing that we do when we have topics, but tonight's fun because we can just freestyle graph things and talk about companies. So appreciate you guys always coming by. Thank you so much. Again, if you're here and you don't ever come to Saturday nights 8 p.m. to 9 p.m. when we cover topics like the Cathie Wood stuff or what's happening on a macro level with, you know, marginal debt or margin debt or interest rates or the Fed, things like that, please come to our Saturday nights. I think we cover really good topics, things to pay attention to at a macro level. And then if you're not a part of our Discord yet, please join that. It's growing. I think we have like 60 or 70 people in it now, which is pretty fun. A lot of those people aren't active yet, but we're getting more active in there. And we've had some pretty good calls lately on things. Nate's been putting in a lot of his option plays, and he's been making some bread lately. I think last week he had 200 or 300, I think it was 100% moves with one of his call options. So it's getting more active in there, and I think we're able to make some more money together in there. But thanks for sticking by, guys. Tattoo Chef, yes, King. We'll see if that breaks out this week with the dollar having some weakness. But yeah, appreciate it, guys. And we'll be messaging this whole week in the Discord. Figure out there might be some good plays in the market. Some that we covered, like Avis. The one that King Baboon talked about, it looks like that had hit a really significant support and can potentially break out. And then we had one more. What was the last one? I'm trying to go back up in this chat. There's another support line that it was bouncing off of. Oh, ChargePoint. ChargePoint seems like another potential play. So those are things to keep an eye on, and we'll talk about it in the Discord this week. But thank you guys. Hope you guys have an amazing trading week, and I hope we all make a ton of money. Night, guys.